Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
Welcome back, everybody. Delighted to say we have another special guest today. Welcome Mervyn Skeet, who is the Director of General Insurance Policy for the ABI, or the Association of British Insurers. How are you doing, Mervyn?
Good, thank you. How are you?
Yeah, good, thank you. We're excited to dive into the world of insurance policy with you.
Yeah, thanks for joining us.
Well, one thing we always like to ask our guests on the show is, how did you come to be a part of the insurance world?
Yeah, well, so I started out insurance in 1989, believe it or not.
Nice.
So that's, 35 years ago now.
Yeah.
I joined Chubb Insurance back in 1989. I was there for about 15 years and then moved on to another London market insurer, XL, and was there for another 15 years. So all in all, I've been around the industry for about 35 years.
Wow.
Did I plan to go into insurance 35 years ago? Probably not,
No.
but I'm glad I did.
Yeah, no, definitely. And when did you start to move, I guess, more towards policy and that sort of side of things?
So I'm an accountant by background, so I spent most of my career in the finance function. It was really only a couple of years ago that I got involved with my current role at the ABI. But I've been around the industry for quite some time and spent a lot of the time with senior people within the industry and hopefully can bring that level of experience to the role.
Very exciting.
And for those listeners who are sort of outside the UK, and even listeners who are based in England, tell us a bit about the ABI. What is the purpose? What is the sort of direction that you guys are looking to have an impact on?
Yeah, so the ABI's purpose really is to serve its members, but also the customers of the industry. We have clear purpose statement, clear vision. We want the industry to be trusted by customers. We want to have a market that our members can operate in. It's really about acting as a representative of the members, but also making sure that customers get what they think they're going to get from an insurance policy.
Yeah, and members being the insurance carriers.
That's correct. Yeah, so we have 300 members
Yeah.
or thereabouts who are carriers. By and large, there are some reinsurers in there as well, but they are carriers nonetheless.
And if you become a licensed carrier in England, are you automatically a member of the ABI, or is
No, you have to. It's a membership association, so you would have to actually join the association to become a member. Anyone who's interested can always let me know.
I'm sure most of them have your 300
Absolutely.
plus. You obviously are making quite good headway into that group.
Is there sort of a starting story as to how this association originally came about? Or?
So the ABI is nearly 40 years old. It's 40 years old next year, and it was a merger of two organisations.
Yeah.
That's 40 years ago. I'm sorry, I can't tell you exactly what the predecessor associations were.
Yeah.
But it's 40 years old next year, so it's a big anniversary.
Yeah, understandable though. I think that and happy birthday, I should say, for a year's time. Get that in just in time. It's understandable that insurance does need a body to support it in that regard, especially as you said, to the point around possibly confusing products for consumers, needing high standards because of the role it plays in society.
Yeah, I mean, the other thing we do quite a lot of course, is work with governments and regulators to make sure that they understand how insurance works and why insurance works the way it does.
Yeah.
We've been involved in the last week on issues around coverage for the riots, for example,
of course.
Which there's quite a lot of press coverage around that yesterday. And then there's things like motor insurance. There's a big challenge right now around affordability of motor insurance, for example.
Absolutely.
So what we're trying to do is to make sure people understand why we're in this position, what drives it for the industry, but also then understand it from a customer perspective as to what drives it for them.
Yeah.
Affordability is a massive issue for if you can't afford your car insurance, given it's a compulsory purchase. But at the same time, the market's not been making any money on motor insurance for several years. So that it's trying to find the balance between the two of those that's really important.
Yeah, we've talked about that in some previous podcasts, the sort of delicate balance that insurance sometimes has to play in its role as a social good.
Absolutely.
And a requirement for like society at large. But at the same time, if we make it too hard for the insurers to make money, they will just leave. We've seen that a lot in places like Florida. But if if we overstep what we sort of force insurers to have to do, they'll just leave, and then that makes the problem possibly worse. And so it's an interesting position that where you guys sit to sort of help bridge that gap. And I think a lot of times it does come from that knowledge gap, right? People like yourself who have a career in the space helping translate what the insurers need to do, but also understanding the consumer side and why it's difficult.
Absolutely. So the ABI put out actually a roadmap for 10 items that we think needs to be done to improve motor affordability, and it's a real mix. It's a mix of what the industry can do, it's what government can do, and what regulators can do, and that really, I think, sums it up. Is that you have to find the balance between all of those aspects. It's a real difficult place if people can't afford to buy insurance, but at the same time, those companies aren't making money. You're right. You quote Florida, California is another example of that, right? Where people just pulled out the market, and that's because in those states, the regulator sets the prices, not the companies, and that's a real challenge because, if an insurer can't make enough money to cover the claims, it becomes an issue. Insurance, at the end of the day, is an absolute lifeblood for all business because it takes away some of the risk that companies otherwise wouldn't be able to manage themselves. And ultimately, it's a pooling exercise, right? Yeah. So, I've used this term many times before, but I still think it's very, very relevant, and that's the premiums of many pay for the claims of the few. Yeah. And that's really what insurance is about. So you have to have members and carriers being able to cover their claims costs. Mm-hmm. But likewise, you're trying to find a scenario where those people buying insurance can afford to buy the premiums.
Yeah. So how do you go about convening, I guess, those various voices to have these difficult conversations? Because as you mentioned, you've got the voice of government on one side to manage. You've got the insurers that you represent as members. You've also got the public whose concerns you're looking to understand. And you've managed to, in the motor example, come up with a roadmap of 10 things. Yeah. How do you go from stakeholders to an outcome?
Yeah, so I think it's very important just to have lots of discussions with each individual part of that the stakeholders as you described them. Yeah. We need to make sure that governments understand the environment and if there's things they can do. So just before the election, Labour brought out a plan for drivers, which we supported because it came up with many of the things that we had already said, like, it may sound like silly things, but improving potholes. If you improve potholes, then there's less damage and there's less claims. So that there's a natural thing there. So it's about making sure that government understand the environment and can help us to correct that environment.
Is that somewhat dependent on the data that you have access to be able to know that potholes is a concern? Do the insurers give you data?
Yes, they do. So we collect a lot of data from our members, and we produce trackers every quarter on both motor and household policies to make sure that that we can demonstrate what's happening in terms of premiums and claims. It's an interesting one because obviously we need to think about inflationary impacts as well. So even though the premiums for motor, for example, have gone up a lot recently, if you look back over the last 7 or 8 years, they haven't actually gone up very much if you adjust them for inflation, whereas claims expenses have gone up massively. Yeah. Likewise, on the property side, claims have gone up significantly over the last 7 or 8 years, and that's largely driven by weather events, by climate. Yep. We've had 7 named storms already this year. Some people say it's more than 7. I think it's at least 7 named storms this year, and that creates additional claims. Yeah,
and it adds just another level of pressure to the industry, right? We have, even if it's, as you're saying, premiums are sort of rising with inflation, if they're not, staying in line with claims, that's going to cause that stress and the challenge against profitability and things to sort of emerge. But it continues to sort of layer on the sort of concern the insurers have as they look towards the future, right? These trends seem to be going in one direction. So if they're going, well, our combined ratio is still below 100 currently. If I'm looking at where we've been going, I don't see a world in 5 years in which we are on the right side of this. And so they begin to sort of potentially like course correct in advance, right? Knowing they're going to have to try to navigate what is worsening as a claims environment.
Yeah, I mean, so in order to write insurance business, it's a highly regulated industry, right? So you have to have capital.
Yeah.
And most organisations will have a choice where they put their capital.
Yeah.
So, insurance and reinsurance in today's world is a global business, right? Many of the household names that write business in the UK are not owned in the UK; they're owned overseas.
Yeah.
So they're looking at where they put their capital across the world, and if you can't make a good enough return on that capital in a given location, then you may decide to put that capital somewhere else where you think you can get that return.
Yeah. Well, and that's because reinsurance obviously plays a critical role in the pricing accessibility there. How do you sort of see the ways you try to attract reinsurance capital such that it allows the insurers to more effectively source additional protection themselves?
Yeah, I think so. London's obviously one of the big reinsurance centres in the world. There are probably 3 or 4 others: Bermuda, Switzerland, the US. The really big reinsurance. Germany would probably put a case for that too as well. But so there are 4 or 5 maybe big reinsurance centres in the world, and a lot of business does come to the UK for reinsurance capacity. But it's based on can they make a return on that capacity, and we've seen collectively globally over the last 2 or 3 years a real sea change in reinsurance pricing on the basis that they'd made losses for a number of years previously and felt the need to put the prices up.
Yeah.
That has obviously a knock-on impact on primary carriers as well, because their reinsurance costs have gone up. If their costs go up, then clearly premiums will need to go up to cover that too. So I think it's about having good risk, to answer your question. If you have high quality risk will always attract good capital.
Yeah.
It's those more difficult risks that makes it harder to get capital to support it. And what we're seeing is that retentions have gone up as a result of that, right? So the retentions that the primary carrier has to hold have gone up because there's concerns around risk.
Yeah.
The risk profile.
Speaking of that topic, I guess would you typically get involved in some of those more challenging coverages? I know obviously we've achieved things like flood re and pool re in the past. What sort of role would you play in those conversations?
So we're playing quite a significant role in cyber right now. So cyber, is probably one of the growing risk areas that most people should be concerned about. Unfortunately, a lot of people aren't in the way we think they should be. So we've set up a working group with Lloyd's to look at cyber across the market because we think it's important that various parts of the market have access to quality cyber cover at a reasonable price, which again strikes that balance between the customer and the insurer. The area that the ABI is particularly focused on is on SMEs, because it's pretty clear that a lot of SMEs don't buy cyber cover.
Yeah.
And even those that do buy cyber cover aren't necessarily buying the right type of cyber cover. So we think there's a real protection gap there in cyber at the SME end of the market. There's also a protection gap at the very top end of the market where perhaps risks are not currently insurable. So it's systemic risk, and that's a real issue as well. So I wouldn't say the middle of the market's working perfectly, but it's working better than the ends of the market, the lower end and the high end. And so we're focusing on trying to find solutions for the small end of the market, the SMEs, and the high end of the market where it's systemic risk.
Yeah.
You mentioned flood re and pool re. There is a possibility that we consider some form of public-private partnership for the systemic risk, but I don't think the market's quite ready for that yet. We may be at some point, but there's still discussions to be had around that. I think the area where we can really make a difference is the protection gap at the bottom end of the market, where SMEs, I think they need some help to really understand the risks that they're running. It's much easier to see your building physical risk than it is to see a invisible risk of somebody attacking your systems.
Yeah. Well, I think it's an extension of kind of the way we always looked at casualty in many ways, where there's one is very obvious if this thing falls down, there's a reconstruction cost and all these other things, where casualty and now cyber as an extension of that have that sort of invisible nature that applies to them, which can make it at least hard to assess it before a claim happens, right? When a claim is happening or when a loss has occurred, then it feels much more obvious, but in advance it feels a lot more opaque. Absolutely.
And the other thing, going back to the dilemma we've talked about already so far is the what can be afforded and what can carriers provide. You know, if an SME is struggling to keep the lights on, then they have to make decisions about what cover they buy.
Yeah.
And so I think what we can do as an industry is to improve the way we explain that cover and explain the cover that's required.
Yeah.
From a cyber perspective. And you know, are there ways we can think about providing different types of cover? Maybe it's parametric type cover, for example. There are already some fairly innovative products in the market where, you know, parametric cover might be the right answer, where you pay slightly less for your premium, but it's triggered and you pay, you know, you get a specific payout rather than it being a full indemnity. So I think that's an area perhaps we could explore.
Yeah, well, and it sounds like there's a critical role that data will play in helping you evaluate those risks, learn about, you know, where the exposures really sit, but also helping the insurers price them more accurately and essentially getting to that coverage gap closing or narrowing in an impactful way. Where do you see the role of data sort of driving some of these initiatives forward and helping us achieve those goals?
We've been talking about data for a very long time in the insurance industry. In fact, we talked about big data for tens of years. You know, and I'm not sure it's really, you know, taken off the way people expected it to. I guess the technology that may be able to help us move to that level and really focus on getting data out quickly, something like AI. You know, AI has to be a way of getting access to data quicker, or more importantly, analysing that data quicker. If I think back to the 90s, when Hurricane Andrew hit, which was one of certainly the biggest hurricane I remember back in that time, and it felt like that was a game changer in terms of modelling for cat risk and nat cat risk. Maybe we're not far away from something similar from a cyber perspective. Hopefully, we can do it before an event rather than after.
Yeah.
But it feels like, you know, cyber modelling needs to be enhanced in order to get that.
Yeah, I feel like we're at a similar tipping point as an industry where what Andrew showed was the need in many ways to have an understanding of your catastrophe exposure and what that might look like. And I think now, as you're seeing, not just in the UK, but around the world, the pressure against insurance pricing. And I think we're getting to this point where for us to, as an industry, get to a better position where we can deliver to clients what we need, there will be this reliance on data being able to help us navigate that in the way that there's this reliance on cat models to help us write property risk around the world.
And I think, you know, AI has come to the fore in the last couple of years, right? Generative AI in particular. And I just think that is a potential way. I'm not saying it's a panacea, because I'm not sure it is, but it does feel like there's an opportunity for that interrogation of data, which we didn't have back in the 90s for sure.
Yeah.
When Andrew hit.
Does it put a role onto the ABI to be having policy conversations about AI with the government in terms of, you know, what regulation they should be expecting, etc.?
Yes, I mean we released some principles around AI earlier this year, which we thought were I mean they mirrored in many respects the government principles that had already been prepared, but they weren't prepared for insurance. We prepared, you know, we sort of like tailored them for insurance in many respects. So those guidelines are out there. We think they're very, very important. I think our challenge now is to have wider discussions about how AI can help, you know, collectively. We have one major challenge as a trade association. We have to be very careful of competition law.
Yeah.
So we're not allowed to talk about future pricing. We're not allowed to talk about any impact on the market, because that would be against competition law.
Yeah.
So we have to find a way of talking about managing risk without talking about pricing.
Avoiding cartel-like behaviour.
Indeed.
Exactly. Yeah.
So the important thing for us is to try and help our members to think about how AI could help with the data, the lack of data.
Yeah.
And it does feel like we're at that point, as you said, kind of a tipping point where, similar to where we were after Andrew, where we need to get better at understanding the data that's out there from a cyber perspective. I think the data's there. It's actually interrogating that data that's going to be the challenge.
Yeah. Well, and that's, I think, the reason the big data initiatives and ambition has ultimately gone unrealized in what we sort of hoped it would become.
is because of like this fact you have a bunch of it, but it's not something you can interrogate. It's not something in any sort of structure or standard. It's just there. It's like you have the oil, but you can't drill into it, or you've pulled it out of the ground, but like you don't know what you do with it, right? You have to have the system in place to get it to somewhere that it does something valuable. I think the introduction of AI is a way to bring in and scrape for more sources of data, but then two, the ability to sort of organize and put it into places such that it's able to deliver on that value will be a huge
and quickly.
boom. Yeah,
that's the other difference. And the other thing that is a problem with in insurance companies more generally is that often systems don't talk to each other in the way they should. There may have been many acquisitions over the years, and it takes a lot of work to pull those systems together and have them talking to each other.
Yeah.
Well, if you can have a technology that's going to, as you say, scrape the individual systems, that might be a way of bringing it together much quicker. So it's about speed, but it's also about access to the data.
Yeah.
That maybe in different legacy systems that don't at this moment in time talk to each other, or if they do, it's with a lot of bells and whistles to actually make that happen.
Yeah, it's something we see all the time, is not only just within a company where, as you say, like certain points of data sit in different systems and never the two shall meet or have, speak, but also when you think about where reinsurance fits, like for that insurer to get the protection and cover that they need to get that data to their brokers or to their reinsurers. And if none of these systems ever talk to, like, the way you do that is you pull it down into like a spreadsheet file, you email it to someone, and like it's the burden in the aggregate is so enormous, where if we're able to sort of make these systems talk or sort of bring the data together more effectively, it really unlocks a ton of value.
Absolutely. I mean, if the data's unlocked for primary carriers, then it will be unlocked for reinsurers as well, and that should help them to assess the risk in the same way as it helps the primary carriers to assess the risk. As you say, it's unlocking data for the whole of the ecosystem.
Yeah.
Do you find, as a members body, you're able to set any standards sort of back to your members in the sense that they are obviously relying on you to be their voice, but would you go back to them and say, right, we've communicated on your behalf, and here's the message back you need to sort out?
Yes, I mean it's a two-way process, isn't it? Yeah. It's not a one-way process. We will go back to our members and say, look, we think this might be the right way forward, but at the end of the day, we don't have any sanctions. We're not a regulator, so it's about making sure that there's a trust in both ways, and I believe that trust is there very strongly. So if as a trade association we go back to our members and say, look, we think you ought to be thinking about it in this way, then we would hope they would take that on board, and we expect them to take that on board. But it's not as though we can. We can't do what the FCA do or the PRA do and go, you will do this and you will supply this data within this time frame. We just don't do that. Yeah. We ask for data in a time frame and we get the data, but it's not prescriptive in the way that a regulator would ask for it.
Yeah, makes sense. And what other sort of issues are you asking of your insurers, or are they asking of you nowadays? What are the big themes across? Well, I guess you cover everything, right? Regulatory, tax stuff, all sorts of things.
Yeah, I mean, so climate's a big one, of course.
Yeah, of course.
So, as we mentioned earlier, we're seeing climate have an impact on claims, whether it be in domestic property business here in the UK or internationally on a nat cat issue. So, we have a climate roadmap that we've put out there, which I think helps us to navigate our way around that. There's more we can do there. Yeah. We put out a nature report earlier in the year, so it's not just climate, it's nature too. I heard a story fairly recently of natural ways you can deal with flood issues, like reintroducing beavers apparently as a way of helping with flood defences. Well, that sounds like a win-win really. But I mean, don't ask me to give you lots of details about that because I don't fortunately have that. But it's an interesting concept, isn't it? That you can use nature to help with flood defences.
Definitely.
So climate's a really big issue. Technology and AI we've already talked about. I think the climate issue is important because of the impact it's having on how insurers and reinsurers, for that matter, assess their business. I'm not sure that if we'd have sat here and had this conversation 5 years ago, you'd have expected 7 named storms in 1 year in the UK. I mean, 7 hurricanes maybe in the US, but that would be in a bad year, right? But not 7 named storms in the UK. So that there's a definitive change there.
Yeah.
So it's about trying to assess the new risk and what that means.
Yeah. Well, and I think we've talked about this before, this idea that this is like becoming the new normal in many ways, but it's that same idea that 7 named storms, which would have been an absolute anomaly 10, 15, 20 years ago. Now we're looking at next year going, maybe not 7, but like 5 or 4 or 6 could be reasonable. So again, we're looking at the world going, we can no longer just assume these are like, massive anomalous years. These might be something that we have again in a couple of years or next year even.
That affects modeling, right?
Yeah,
so you talked about modeling earlier. So modeling is naturally looking backwards, right? And seeing what's happened in the past. But if you can't rely on what's happened in the past to be a determinant of what's happening in the future, then you have to change your models.
Yeah.
So I think there's a real focus on, what happened 10 years ago or 5 years ago. Is that still, relevant in terms of what's going to happen going forward?
Yeah.
If things have changed, if the risk profile's changed.
Yeah.
I think it'd be really useful for our listeners to sort of benefit from your perspective here on a very zoomed out view of how all the nuts and bolts of the insurance industry work together. Because, we've got lots of different distribution channels. We've got modelers, we just talked about, and modeling providers. I'd love to just, very open question, how are you seeing things change over time? Like, are people having to adapt? We've got comparison sites these days. We've got, all sorts of new tech coming in. Where should young listeners maybe be thinking about, I could have a career in insurance that takes me over there? Or,
So the first thing I would say, and I've said this a few times in the last couple of years, and I really believe it, I think insurance is a really exciting place to work. It doesn't have the greatest reputation for people joining the industry, but actually there's so many ways you can interact with the industry. Whether it's being the best modeler who's going to take us forward on this journey of making models better and easier to assess risk, or it's technology experts who know how to interrogate data and get data out of the system, or underwriters who are trying to grapple with risks that maybe they haven't seen before, different types of risks. That to me feels like great opportunities for anyone who's aspiring to have an exciting job. I mentioned earlier, I'm not an underwriter by background. I'm an accountant, so I come from the finance side. So even if you don't feel that underwriting or modelling is your best way forward, think about the finance side of things, because insurance companies have to be financed properly. They have to have the right capital to write the business. They're required to have capital by regulators. So there's a huge opportunity there for good finance people to work with the industry as well. We just have to get better as an industry about selling it. We haven't been good in the past at selling the various components of the industry that you really do offer amazing opportunities. And if you're at school or at uni now and you're wondering why insurance would be the right career, the thing is, you can go down 15, 20 different paths and still be a big contributor to the industry. We could probably hear for the rest of the afternoon just discussing each one of those. We talked about 3 or 4 there, but there's many others. You talked about distribution. Distribution is really important in making sure the customer understands what they're buying. The biggest challenge I think with price comparison websites is the name. It's a price comparison website. It's not necessarily, are you buying the right product for you? You're buying it based on price, and everyone understands that's a problem. If you are struggling to pay for your insurance, that's very much understood. But if we could find a way of actually making sure people understand the value proposition of insurance a bit better, what an exciting career that could be. Trying to make sure that people understand what insurance does and how it oils the wheels of industry.
Especially when you look at the commoditization angle we've put on the industry for so long, that even if you sort of see 3 prices and then a list of like what's covered and what's not, people look at go, well, do I really need that one little line or those 2 lines? Like, probably not. So they'll opt out a lot of times. But again, it's an imperfect assessment of their own risk profile. Right. And so how do we move those things forward? And and make that more easily.
That's the piece that really excites me, is how do we get customers to understand what they're buying better and why they're buying it. As you point out, how do we get them to understand their own risk profile?
Yeah.
That's really important, right?
Yeah.
We know that certain classes of business are mandatory.
Mm-hmm.
We know you have to buy it, and I guess I can understand, that price might be a big driver there. We do understand that price would be a big driver based on if you're struggling to afford it. But let's think about your whole risk profile.
Yeah.
And are you buying insurance to cover that, or are you self-insuring without knowing why you're self-insuring? So cyber's another classic example of that, right? So are SMEs self-insuring because they can't afford the coverage, or is it because they don't understand the coverage?
Yeah. I love that as a quote. Like, are you self-insuring without knowing it? Because when you sort of go, oh, that's a cheaper option, or I don't get this, like I don't really need that, like that's okay. You might think that, but like you are taking on self-insured risk that you were unaware of or didn't really recognize the impact of what that might be. And that happens so much. Right. You're like, well, I probably don't need that. It's like, okay, you don't have to buy it, but it means that if anything were to happen here, you are now insuring this yourself.
Right.
Right. That's a really powerful phrase, I think.
I think it is, yeah. I think it's really important that people understand what they mean by self-insurance.
Yeah.
If you don't have the money behind you, the capital behind you to deal with that loss if it happens, if you're not insured, then that makes it very, very difficult. So it's the issue is, of course, is that the insurance is intangible, right? You can't touch it, you can't feel it per se. And if you pay a premium and you don't have a claim, then some people think, well, that I didn't need it. Well, actually, you did, because you bought peace of mind. That's what you're buying. You're buying peace of mind, right? Yeah. And that peace of mind and that ability to cover a risk if something bad goes wrong is really powerful.
Yeah.
I think a lot of big businesses have seen that for many years. Now we need to make sure that smaller businesses and individuals think that way too.
Yeah, and I think there's a better balance of, because we always think of self-insurance as like the deductibles,
right,
or retentions, but doing a better job of going, you're going to take on this additional like self-insured component, but here are all the ways we're going to help you be preventative against losses, which again will accrue to the benefit of the industry writ large, that claims have reduced because people have intentionally taken higher deductibles and have intentionally undertaken risk mitigation efforts. And so I think we can do all of these things concurrently, which makes it for a really exciting future in a lot of ways.
Absolutely. I mean, I think Swiss Re for 2023 said that only about 38% of all economic losses were covered by insurance. That's a massive opportunity for the industry.
Definitely.
I mean, I'm not saying it 100% is achievable, but 38% seems pretty low.
Yeah.
And to that mission, I guess, what are you finding are the biggest sort of communicative tools you have at your disposal nowadays? Are you on the socials? Are you sending newsletters? What's the sort of modern way you reach your audience?
The ABI is certainly on the socials, and certainly focused on making sure that we try to get an understanding across the whole population. We did a recent motor campaign where we did a short animation around what happens when a crash happens, and it was called When Dad Comes Home, and that was very well received actually, and we worked with influencers to get the message across, and that felt like it was a really good way of moving things forward. Obviously, you'll have worked out roughly my age, given I've been 35 years in the industry. And
so 37, that's it.
Yeah, and something like that. I'm that's not my expertise, but there are, again, it's about attracting the right people to the industry, isn't it? Yeah. If we attract the right people to the industry, they can be the ones who take that forward and using different media to explain how important insurance is.
And I guess if you're joining up your members, you're kind of empowering them to act somewhat, actually in terms of communicating the right things.
Well, ultimately, the members are paying for those campaigns that we're putting together, right? So they have to be comfortable that there's a benefit for them. Yeah. My understanding is that we secured a lot of traffic on that particular campaign, and it wasn't just people clicking in for 1 second and coming out again, they stayed and they watched a large chunk of it, if not the whole of the video. That feels like that's a step in the right direction in making sure that people understand, the benefit of insurance. And to the point you just made, let's make a conscious decision individually, collectively as organisations that, you're going to insure or not insure.
Yeah, that's a fabulous way to end this conversation, Mervyn. This has been delightful and super informative. Thank you for joining us.
Thank you.
Thanks so much for coming on the show. Thanks for tuning in to the Reinsurance podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts. You'll find the links in the show notes.